afternoon and welcome back to Markets Today. If you're just joining us, we are having a conversation with regards to the rate cap repeal. This is a constant conversation and it has been dominating markets this particular week. For your information, earlier today, His Excellency President Uhuru Kenyatta did append his signature on the bill to totally remove the rate cap. This total rate cap repeal is actually for new loans, not for existing loans. However, we do expect that at some point the banks will begin to restructure existing facilities. If not that, then the other expectation is the majority of the loans are already almost about to end the tenor of the rate cap environment. So we do expect a correction, but a gradual correction with regards to pricing of assets by the banking sector today. Now, that said, we have seen a bit of a rally on the stocks starting from when this decision or this conversation started in Parliament. But then yesterday and today, it's been muted. Anything over 5%, that has been negligible, with KCB leading the pack. We continue to see net inflows, particularly to KCB and Cooperative Bank. What we want to answer today, is there more value on the table for the Kenyan banks over and above the positive investor sentiment? What other sectors could potentially be affected? And what is the foreign as well as the domestic investor sentiment on the NSE at this point in time? Rolly Kipkemoi is an analyst at Nabo Capital, and he will be joining us to help us answer a couple of these questions. Welcome to the show, Rolly. What is the investor sentiment at this point in time when you're looking at banks?
Well, the news is generally positive. If you maybe take a poll amongst investors before this whole discussion began, maybe you'd find that a majority of them were not expecting it to go away. But so certainly this is positive, both for the short term in terms of gains in the stock market and all, and long term in terms of value in the business, because you see that is interest rates directly tie into banks' revenues, and therefore if you're telling them they'll price their loans higher, then that will be positive for them. So
that will be positive for them.
So it is positive, though there are a few negative sentiments here and there.
Okay.
If you compare the current environment, the new environment that would be compared to the previous one.
All right.
Yes.
So interesting. Now we've seen it's been a mixed bag on Equity Bank, foreign sellers, foreign buyers. On KCB Cooperative, slightly more foreign inflows into this particular counter, and this foreign inflows onto the NSE have actually supported the currency. Do you think this is going to be the trend? I mean, yesterday we traded 3.2 billion shillings. That's over 300% growth with regards to turnover on a day-to-day basis. Is this the new norm, or is this a one-off?
It's a special situation, I must say.
It's
a special situation. I'll take you back as well to 2016, and I remember you were in the market then.
Yes.
You saw how the volumes were.
Oh yes, for like 2 weeks.
Yeah. So it's the same thing right now. The past 2 years have not been very positive.
So it's
2018,
short.
2019, mainly for the emerging markets and frontier markets, and therefore investors are trying to really chase value that they can find on the table, so that maybe they can report positively to their clients at the end of the year. In terms of it being long term, no.
So this
but
is a window.
Unless maybe we'll see subsequent, maybe such kind of volumes being traded once banks begin releasing results, maybe next year, 2 years from now.
So maybe from March.
Yeah. And again, it's also dependent on how the banks come out and say this is how we're going to move forward.
Actually, KCB, did you see? You've seen KCB.
Yeah, we've seen that KCB saying 2 to 3%. I know Mr. Waigara is the chairman of the Kenya Bank Association, but I'm sure other banks will also want to chart their own course, right? And again, you need to ask yourself, this cap, who does it mainly affect? And my opinion is it affects banks that whose loans are highly skewed towards SMEs and other individual borrowers and the likes, and therefore you'd really want to watch out for those banks, and their sentiment would be possibly their increase would be higher than that 2 to 3%.
Okay.
Yes.
Interesting. Maybe before we delve deeper into the banks, let me bring you back to again investor sentiment. I know you do look at sub-Saharan Africa. What's the sense that you're getting? Is Kenya now coming out as a better investment opportunity for investors? How does it compare vis-a-vis the likes of Egypt, Nigeria, South Africa, just on a general basis?
On a general basis, I'd say if I'd rank them, Kenya is currently competing with Egypt, with Nigeria coming in third or fourth. If I just look at those,
if you look at those
three
has
key economies.
Has this been the ranking, or has this ranking changed because of the rate cut?
It has changed because of the rate cut, because you see the Kenyan market has been constrained of credit for a long time, 3 years now, and you know how important it is for cash flow to be flowing into the economy. And when you were reading the news, you alluded to the fact that there are other sectors that could benefit. You know, those businesses do not generally lend, but they depend on those loans to go to their distributors, to their suppliers, to their consumers and the likes, who will then consume the products, and therefore they will benefit out of it. So Kenya, if you look at from a regulatory point of view, Nigeria is negative, Kenya is positive, and therefore
much better ranking. So the excitement, if even though the volumes don't continue, at least the excitement is it's fundamentally justified. So we've actually changed. There's been a disruption with regards to our regulation and the economic outlook. Now let's come to the banks. We've seen them, I think, by the end, just before the conversation on Monday, before the decision had to be taken by the parliamentarians, we had seen equity up 24%, KCB up 23%, cooperative up 22%. There was a bit of a correction, a bit of profit taking with investors selling out to actually book in that profit on Monday, and then again that reversed yesterday when it was clear that the president would actually have his way with regards to his reservations on the rate cap. Now that's investor sentiment. Investor sentiment was positive. There was a lot happening. But now when we come to the crux of the matter, when we're looking at the numbers, fundamentally, has anything changed?
For the banks?
For the banks.
For the banks.
Is there a material fundamental change to the earnings expectations?
Well, there are a few lines that you need to look at when you're looking at these banks. And you see, first, for me to earn the income from the interest, I first need to deploy. So so you have to look at how is their loan to deposit ratio. Okay, so
loan to deposit ratio.
It would be better for a company, for a bank that has a lower one, because that means then they can mobilize the remaining amount of deposit to the new loans.
Which bank comes to mind when you talk about
Equity Bank stands out. Standard Chartered is another bank with a low loan to deposit ratio, while the other players, Barclays, KCB, have their LDRs much higher. Much
so for this, they have low hanging fruit. So for them, they can quickly ramp up loans.
They can quickly. They can quickly do that. And then you also need to look at what's the average maturity time for their loans. So because this regulation impacts new loans, right? And therefore, the shorter the maturity, like the average maturity for the loan book, the shorter the maturity, the better for the bank.
Which bank has the lowest? Which has the highest in your evaluation?
Equity again
has the lowest.
Has one of the lowest.
Which is what? Is it a year? Is it 2 years?
No, maybe about 3 years.
Maybe 3 years.
3.5, 4 years, around there, compared to the other banks which have higher.
Where would KCB and cooperative?
I'm not sure about that, but certainly
much
higher than that.
So if equity is 3 years, it means from 2016 up until now, it's more or less done with the loans that it issued in the rate cap environment.
Can turn up its book, about over 30% a year.
Fantastic. All right, interesting. Okay.
The other thing you also need to look at is, how is their level of profitability right now, and how will they possibly be impacted? Because if a player like and I think I'll throw in another thing here. How is the structure of your loan book? Is it more towards corporate? Is it more towards SMEs? Is it more towards individuals? Because the cap itself really constrained small to medium-sized enterprises and individual borrowers. So those are the banks playing in that field,
so they have an opportunity.
The ones who will most likely benefit.
Which banks would this be?
Again,
Equity Bank. Equity Bank. Equity Bank.
KCB comes up as well. But again, you see,
NCBA?
we've been NCBA as well. But again, you see the environment then and now, we didn't have a lot of digital lending.
That's a fair
seeing
point.
more corporate banks trying to target the there's individuals and SMEs. We see Timiza from Barclays.
Exactly.
We see KCB being more aggressive. CBA, the partnership with Safaricom and all.
I'm sure
NIC itself.
Even Stawi now, I mean, the one that's championed by the government, where you can actually loan up, you can take credit of up to 250,000 on your phone. Wow. Okay. All right. Then maybe we can go back to the element of profitability, and I want to imagine that you would be pitting the revenue, because all of a sudden there was a cap on how much you could charge on a loan. Now that's profits gone on new loans. What do we expect? Because I know the margins for the industry have been about 6%. This is comparing the revenue vis-a-vis the cost of the funding for the banks. I think I've seen numbers 6%, 7% on the higher side on average. What happens now that the rate cap has been removed?
Well, you see, the individuals who deposit will possibly also want higher rates, because they know the banks will have a higher interest that they will charge. But again, maybe the rate of increase for the deposit won't be as high as the increase in interest. So they'll possibly be able to increase that spread a bit, which will possibly positively impact elements like the return on equity, net interest margin, and
the return on equity. All right,
all other return metrics.
All right, hold on to that thought on return on equity, because that has been a conversation on whether you should be paying much more for the securities on the NSE. Let's take a look at the closing bell, and don't go anywhere. We'll be back shortly.